All right, let's get right into it. In a housing market that's, let's be honest, pretty wild right now with high rates and a ton of uncertainty, one of the biggest home builders in the country is making a massive change. They are literally throwing out the old playbook of just offering discounts to move houses. Instead, they're making a huge bet on romance. Sounds kind of crazy, right? Let's unpack what that actually means. So, to get this strategy, you first have to understand that there are basically two different buyers in the market today. On one side, you've got the rental refugee. This person is driven by need. They have to move. They're super price sensitive, and the question constantly running through their head is, can I even make this work? But then, over on the other side, you've got the dream home chaser. They're driven by want. They're all about the features, the lifestyle. And their question is totally different. It's, should I do this? And here's the crucial part. Trying to sell to both of these people at the same time is like running two completely different companies. The old way of doing things, trying to be everything to everyone, it's just not working anymore. And that brings us to the star of our show today, Taylor Morrison. They're a huge national builder who took a hard look at this split market and realized, whoa, we have to make a choice, a really tough choice, if we're going to thrive in 2026 and beyond. You see, for them, this is the year to decide not just what to lean into, but maybe even more importantly, what to step away from. So Taylor Morrison is deliberately moving away from that old strategy of trying to compete everywhere and is pivoting back to what they do best. And you don't have to take my word for it. Hearing it directly from the CEO, Cheryl Palmer, just makes it so clear. She totally nails the psychological gap here. For that first-time buyer, it's all about the stress of, can they do it? But for the move-up buyer, the one with more financial breathing room, it's a confident choice of, should I do it? That single word change, can versus should, it changes the entire game. So, faced with that reality, that fork in the road, they made a choice. They chose a side. Okay, so what does choosing a side actually look like? Well, it looks like a strategy that favors romance over discounts, and that is a fundamental shift in how they build and sell their homes. This slide just lays it out perfectly. On the left, you've got the old way, building spec homes, that's houses without a buyer lined up, and then throwing heavy incentives at them just to chase sales numbers. But now, look at the right. The new way is a total pivot to build to order. It's all about personalization. And the goal isn't just selling a lot of houses, it's about chasing higher profit margins. And this isn't just about what kind of homes they build, it's about where they build them too. They're actively stepping away from those fringe, outlying markets where a house is just a commodity and the lowest price wins. Instead, they're doubling down on their core areas and the power of their lifestyle brands, like Esplanade. And you know what? There are already signs that this big bet is paying off. The CEO mentioned that buyers are coming in wanting to personalize their homes again. They want to appoint the house, as she says. Basically, they want to pick the finishes, choose the perfect lot. That whole romance of building your dream home from the ground up, it's back. But, and this is a big but, a huge strategic shift like this is never easy. And it's definitely not free. It comes with some serious short-term pain. And honestly, that's what makes this such a bold and interesting move. Just look at this number. Their backlog, which is just a list of homes they've sold but haven't built yet, it dropped by a massive 40%. That's a direct result of stepping away from the volume game, and it means they're going to be closing on fewer homes in the near future. And then there's this. Their gross margin took a 300 basis point hit. I mean, that's 3 full percentage points shaved right off their profitability in the fourth quarter. It's a direct financial hit from selling off that old inventory and still having to use incentives on those last few spec homes. So you might be asking, how in the world can they afford to take these kinds of hits? Well, here's your answer. They ended the year with $1.8 billion in liquidity. That strong balance sheet, that's their secret weapon. It gives them the cushion and the confidence to take the short-term pain for what they believe is a much bigger long-term gain. And just so we're clear, this pivot isn't some act of desperation. In 2025, they were doing great. They closed almost 13,000 homes, brought in over $7.7 billion in revenue, and had a really healthy 23% gross margin. They're basically changing the engine while the car is still moving down the highway at full speed. Okay, so let's zoom out for a minute, because this story isn't really just about one company. What Taylor Morrison is doing is like a giant flashing signal about the entire U.S. housing market. It's showing us this deep crack that's forming in the economy
all thanks to things like stubborn inflation and higher rates that, let's face it, don't affect everyone in the same way.
What this whole strategy points to is what economists call a K-shaped housing economy. Just picture the letter K, right? The top arm is shooting up. That's your discretionary buyers, the ones with financial strength who are doing just fine. But the bottom arm of the K is pointing down, and that's your entry-level buyers. They're the ones getting squeezed by high rates, struggling with affordability, and feeling really anxious about everything.
So, is this a crazy gamble? Well, not according to the experts. Industry analysts are actually looking at this really tough, painful pivot, and they're calling it the correct move. They believe it brings the company back in line with its brand, which has always been about trust and being different, not just being the cheapest house on the block.
So, what's the bottom line here? What should you take away from all this? First, the basic math of building for first-time buyers has totally changed. It's just not as profitable, and it's a really tough market right now. Second, this is forcing builders to pick a side. You can't be a generalist anymore. You've got to pick a lane and own it. And finally, in this new world, your brand, what makes you special, that whole romance thing, is becoming way more important than just being the biggest builder on the block. And all of this leaves us with one really big and, frankly, kind of uncomfortable question for the entire housing market. If all the big builders with the smart money are chasing the romance of that high-end buyer, who is going to be left to build the homes for the rental refugees? That's a question we're all going to have to deal with. Thanks for watching.